What's happening, high tide traders and investors? It's Rod with Power Group. Welcome back on the Pursuit of Wealth. It's Wednesday, May 18th. Happy hump day. Hope you're well today. And in this short video, going to be discussing the stock High Tide, ticker symbol HITI. Going to discuss why it is down so much, why it's struggling as of late, and a lot of people just not understanding why the stock is down, or able to comprehend with the strong fundamentals why we're struggling so much. So I want to come on and do a quick video. Before we get to it though, make sure to smash the like, subscribe to the channel, helps support me, and the channel doesn't cost you anything. If you're new here, subscribe and tick the bell, you'll be notified on any future videos. As you can see, in 6 weeks, we were down 66% on High Tide, the one of the fundamental poster childs of the retail industry. And I actually did a couple videos as well on why I'm bullish on High Tide. I said I took a position a couple of weeks ago, and I was starting to average in. I said I wasn't going, all in or anything like that, because again, this whole sector's been struggling. And I did another video on why fundamentals do not matter yet, keyword yet, in the MJ space, and go check that video out. I'm not going to regurgitate everything I said in effort of time, but there's a reason why High Tide is down this much. There's a reason why Trulieve and GTII, Green Thumb, are down 75 to 80% respectively from February 2021 highs. It's because the whole sector moves together in tandem, right? But the whole sector, fundamentals do not matter yet. When the sector's in a bear market, everything's in a bear market. When the sector's in a bull market, everything's in a bull market, right? This will eventually, fundamentals will later on come into play, but until the sector matures, it's just not going to matter. So I encourage you to check out that fundamentals video. I'm going to end it there though, in terms of why they don't matter. But again, just look back at High Tide here. We're down now 86, almost 87% from the high there. And if we just take a look at Tilray, how much is Tilray down from its February 2021 highs? 94%. So I would argue that High Tide is actually holding up quite better, all things considered. If we take a look at Trulieve from its high there at $67, $8 all the way to $67, it peaked right at the same time LPs, right? All the ones with terrible fundamentals that everybody says are worthless. Well, why are they following LPs? It's because the whole sector moves in tandem. Now down over 75%. Take a look at GTII, right? All these companies have sound fundamentals, but they're all following, the sector follows each other, now down over 70%. If you can take a look at MSOS, right? The ETF that tracks all of the major US companies, look at that brutal slide that we've been on, right? New all-time low on an ETF, we're down over 75%. Again, the whole sector moves in tandem, and I saw a ton of people today asking what was wrong with High Tide. How come High Tide's down? Well, High Tide just ran in the last couple of days. High Tide ran about 60%, and we're down 13% today, and people are confused as to why we're down. The answer is because we ran 60% in a couple of days, and SPY was down 4% today. If the S&P 500 is down 4%, then a rule of thumb that we can expect each individual company, each individual stocks to be down about 3 times as much. So 4% times 3 is around 12 to 13%, right? So that's why it's down today. And we still didn't even start daily consolidation. Going to take a look at the chart here in a moment. But again, High Tide reports Q1 2022 financial results featuring record revenue of $72 million, increasing 34% sequentially, and adjusted EBITDA of $3 million, representing an 80% sequential increase. You can find tons of positive fundamentals in here, but right now the fundamentals do not matter because the market bearish momentum is trumping all fundamentals, right? Eventually, fundamentals will come into play once the sector matures, but we have a wave of growth that we need to see, right? There's still tons of growth to be had in Canada. Quebec just barely allowed edibles. They still don't allow vapes, right? And certain other products. There's tons of growth just in Canada alone, and a consolidation alone in Canada, not to mention when the US legalizes and we see international expansion as well. We did have less than awesome financials though on the prior quarter on March 17th. You can see here EPS came in at negative 0.14 versus the expected negative 0.12. So still at a loss there from operations, and revenue beat by about 2 million. And again, we've been increasing quite steadily over the last couple of quarters, 48, 53, 72, right? Last quarter, we beat on EPS estimates, but still negative. But again, we're seeing this huge increase in revenue, but it's just not reflecting in this share price. And that is because the whole sector is bearish. I see tons of people asking why me, why my stock, right? It's like that for all MJ stocks, right? Not just one company. I encourage you to maybe, follow a few other stocks and just see what the retail investors are saying in those stocks. And I guarantee you there's tons of people that sound exactly like the people in High Tide, right? And High Tide is just catching up to the rest of the sector, now down on average about 80 to 90% across the whole Canadian and American MJ space, right? So high tide actually holding up better than some of our names. It's a weekly inside bar at the moment, so we have resistance there at $3, support at 173. So that's a huge range, right? We're dealing from the low there. You've got a 71% range. I would say that it's more than likely possible that we stay with an inside bar this week, and then another one into next week potentially with only a couple of days left in the week. That's what I could see happening, is another inside bar and tightening range. On the daily time frame, like I said, congrats to the bulls who bought the dip. We had a huge bounce of over 60%, but again, we still haven't even started daily consolidation. We're still in a downtrend. Anything under 374 is a daily lower high, and we're still in a downtrend. So we're out of daily oversold territory. RSI got crushed down there in the 11s. Wow, that is astonishing. But again, what we're going to be looking for tomorrow, closing near the low of the day, is likely more pullback. Okay, so we're likely going to see more downside. Why? Because we haven't changed the daily trend. We need to come down, form a higher low, and then a higher high, change that daily trend, confirm an uptrend with a higher low and higher high. So if we hold support there at 173, we form a higher low compared to 173 here. And then if we break resistance, the high of the bounce at 281, that's going to confirm a daily uptrend. What do we know that the whole sector needs to do before we have any confidence of a long-term bottom being set and a new bull market beginning? Is we need to change weekly and monthly uptrends. We're nowhere near confirming a weekly uptrend, right? We haven't even started the weekly bounce yet. So next week, if we start the weekly bounce and we top out, then we'll look for a weekly higher low and then a weekly higher high, right? And then we need to zoom out to the monthly and confirm a monthly uptrend to be absolutely confident the bear market is over and a new bull market is beginning. We've got weeks and months of work to do, and just be prepared for a little bit more downside on the daily time frame here, because like I said, bulls still need to confirm a daily higher low and higher high. We're still in a daily downtrend, and we're in pretty much downtrends on every single time frame, right? Weekly downtrends. You can see here from the high, we had a lower high and lower low. So as soon as we lost that support there at 660, we confirmed a weekly downtrend. If you just exited there at 660 on that confirmation of the weekly downtrend forming, you'd have saved yourself about 72% of downside. And then on the monthly time frame, we even confirmed a monthly downtrend with the high, low, lower high, and lower low. Another lower high and lower low. Another lower high and lower low. We had a monthly EMA 12 and 26 bear cross. We had all the signs in the world that we were going to see more downside. All of the sector, both American and Canadian, was falling 80 to 90%, right? And now if you look at just bring up any chart, they're all down anywhere from 70 to 90+%, right? And that's because the whole sector moves in tandem. Let me know if you don't agree with that, let me know why, right? I see tons of people comment on my videos recently, and they just comment stuff, but they don't actually say why or explain, because at the end, and then an explanation following that, right? Engage in thoughtful discourse and some dialogue, right? Share your opinion and I'll share mine, right? That's the whole point of me doing these videos. You don't have to agree with everything I say, and I don't have to agree with everything you say. We can still get along, right? Through difference of opinion, we can still be friends. We don't all have to agree on things, but we had all the major warning signs, right? We lost the 10-week moving average. If we just go back here about one more year, you can see here that we were support on the 10-week moving average. Then we lost it, confirmed resistance, and then confirmed a weekly downtrend. That was your signal, right? Even if you exited on that weekly downtrend confirming. We're still extremely bearish. We could see a bull cross, though, of the stochastic. So showing some signs of hope there. And usually the stochastic crosses bullish before the MACD and before we get over that 10-week moving average. On the weekly moving averages, we were also holding the 50 weekly as support, and then we came back down and we lost it, ended up closing down below. Even if you just exited on a weekly close below that, now acting as resistance, you could have exited around that $5 to $6 area and saw, you could have saved yourself about, again, 70 to 80% were the downside. Another major heads up that we had a death cross of the 50-day crossing downward through the 200-day moving average. Right here, we had a death cross in September, right? So as soon as we lost the 50-day moving average, that was a heads up. As soon as we confirmed this death cross, that was a huge warning sign, right? And even if you just exited there on that death cross at $6, again, you would have saved yourself tons of downside. So you can't say that we didn't have all the warning signs. That is why we're down. That's my opinion. And obviously, we're tracking SPY today as well. If you take a look at the high tide chart on the daily time frame and then look at SPY, it's very similar, right? We've been bouncing for the last couple of days. The S&P 500 bouncing for the last couple of days, starting daily consolidation, and high tide very close to starting daily consolidation. So just following the broader market. Going to end it there, though. Let me know your thoughts and comments in the comments below. Always love hearing from you. Let me know if you agree, disagree, and why. Don't just say you're wrong or you're right. Tell me why I'm right or tell me why I'm wrong. Right? Let's engage in some thoughtful discourse and continue the conversation in the comments below. Thanks for joining us again on The Pursuit of Wealth. Again, it's Rod with Pow Group. If you could smash the like on your way out, help support me on the channel. Doesn't cost you anything. If you're new, subscribe and tick the bell. You'll be notified on any future updates. Thanks, and we'll see you in the next video.